Everybody, welcome to the show. Yet another day where we're sitting here right at the top of the danger zone. CPI came in lighter than expected. We got slight little pop, and then they took it right back. Kind of a muted reaction this morning. And guess we pop over here. Alternating involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I predict things and we make trades, you might lose your money. I may never get another prediction right again. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling anything at all, including stocks, options, bonds, forex, futures, cryptos, treasuries, stuff from financial gurus like myself. Don't buy it. Don't buy anything. All right. If you desire personal financial advice, hire a consultant financial advisor. It's not what I'm doing here. I'm not telling you what to do. I'm not even suggesting you take any trade. It's supposed to be entertaining. And here we are. We're expecting a 0.2 month over month, and expecting a 0.3 month over month. Got a 0.2, and year over year. It's funny they color them red when it really should be, green. Continuing the decline on the year over year. Remember, this is still prices going up 2.3% per year. So that $100 item by the end of the year, $102.30. I mean, after doing this, seeing it still climbing, that's rough, right? The government thinks they have, this inflation thing under control, but prices are still going up. All right, that's we only get a deflationary period where prices actually go down every so often. It's not really a common event when we look back through here. So, we got one back here. Prices went down a little bit after being spicy up here. And, that was prices going up at 5%. And then we got a little deflationary period and prices went down a little bit, but then prolonged period of prices going up, little break, very prolonged period of prices going up, still going up. All right, so when you see that getting inflation under control thing headline, prices are still going up. Like, it's not, we're not, you're not putting that genie back in the bottle, as they, so to speak. Prices are still going up. It's crazy, right? Crazy. And how do you keep up? How do you keep up? Like, this is, a lot of us are trying to keep up, or trying to catch up after that, right? We were here, we experienced this, and even though it's slowed back down more to a historical rate, it's still running a little hot here. Still running a little hot. We're starting to get back down, but this is what a lot of us are still dealing with, like that rapid increase in prices, and the money supply for many of our households has not caught up to this right here to put us back to where we were over here. So we feel poor, essentially. That's, after a rapid price increase, it takes a while to catch back up. And that's the real crux of the matter. And very rarely do prices go back down at all, if at all. Now, things that do push prices down are, economies of scale and, creating, it's like big flat screen TVs. Yeah, sure, you can still buy the $10,000 big flat screen TV, but for your normal, 50-inch TV, they've kind of become a commodity where you can get it for like $300 instead of like $1,200. So some things like that have become commoditized, kind of, where the competition and ease of manufacturing has pushed the prices lower. And you look at like smartphones, and it seems like the premium model is always freaking expensive. And Apple talking about raising prices for the first time on iPhones since back here in 2017. I don't know. I mean, It's a world of competition. So those premium phones haven't really gotten commoditized at all. Now, run-of-the-mill phones, you can get them fairly inexpensively. You can pay $200-300 and get a fairly nice phone. But if you want the premium stuff, you got to pay the premium price. And that's what we see on CPI. Now, PCE, which is a similar, Powell says it's his favorite number. It's a similar gauge on inflation. They use the same sort of stuff to build the numbers. And I don't know why I didn't pin it. Let me roll back up here and see if I can find the differences between the two. Thought I had pinned it last time I pulled it up. Let me see. I have this stuff for morning show channel that I keep throwing more and more stuff into, and occasionally I pin things and occasionally I just forget. I've got like hundreds of charts and little tidbit. Almost everything I've ever talked about on here in the morning is stuck in this channel in Discord that I keep for myself. I guess a couple people can see it, but nope, that was not it. Come on, where did I do it? Man, I send myself a lot of stuff. I would roll through it live, but it's got some personal stuff in there that I sent to myself. And I have to find that later. Nope, that wasn't it. I thought that was it. Nope. And man, I don't remember when I talked about it. I kind of remembered it might be easier to find. Golly. What is funny rolling back through here is seeing all the kind of government spending charts that I've thrown in here. It's kind of funny to see all those. Back to Halloween of last year. Thought I had it. Nope. Well, I guess that's a loss. A lot of stuff in this channel. Fear and greed charts. It's funny to watch it go from fear to greed to fear. Speaking of which, we're creeping up on extreme greed right now in the market. And gosh darn it, I cannot find that PCE chart. It's just a matter of the differences in how they break down the different components. It goes from counting housing more, counting healthcare more, or counting it less in the breakdown between PCE and I'm not sure why. There it is. Finally found it. All right, I need to pin that. Just before I gave up, I found it. And this is from the Brookings Institute. Right here. Apparently it's been almost a year. I had to go back almost a whole year for this. So here's the CPI right here. Food and beverage, housing, the biggest component. Whereas over here on PCE, we have other goods and services being the largest component. And we kind of knocked down housing. Now, the interesting thing to me is, I don't know about the majority of you, but I think a lot of us spend a lot more of our money on housing than, rents are up, all that sort of stuff. And we're seeing medical care being a small component of CPI, but we're seeing it a larger component of PCE. And then recreation. Yeah. So PCE, I guess, is a more balanced approach to coming up with the inflation number. These things are more balanced. I don't know about compared to the standard person. You tell me. I mean, I feel like most of my budget does go into food and housing, and there's I don't know where electricity falls into this. Transportation, if you got car payments or whatever. I mean, you look over here, food, housing, and transportation. It's less than half the budget. Over here, just food and housing is more than half the budget. I feel like that's a little bit more representative of the way my life is. I don't know about you. You can let me know in the chat right there. Which one do you feel like more represents your personal household? I'm not sure I'm either, but I feel like this one probably a little closer, especially the food costs. I mean, geez, we spend a crap ton of money on food, and we cook at home most of the time. So I don't know if food and beverage counts going out, or if that's just food and beverage at the grocery store. Housing and food. That's what Goose says. So anyway, seems like CPI a little closer to my personal. So yeah, CPI, food and housing. Yeah, I mean, out of touch with reality. Now later in the week on Thursday, we get this PPI and retail sales right here. This big chunk of data on Thursday. Now, usually PPI, like CPI usually comes out, then PPI comes out, and then retail sales. So it's like boom, boom, boom. For whatever reason, they're pushing PPI out to Thursday and putting it on with retail sales. It's kind of weird to me. PPI has been dancing around lately, going before CPI and now it's with retail sales. The last few times we've seen PPI not being not being CPI, PPI, retail sales, we've seen some funny business in the numbers. So, and it seems like, as Kimberly says, my favorite subscriber, that seems like food costs just keep going up. Like every time you're going to buy something, it's like, what the heck? Beef prices going up because apparently we import a lot of beef from Mexico, and there's some sort of parasite on Mexican cattle, and we've kind of halted the import. So beef prices went straight up. We can look at that here in a second. Right, like right now. Oh, fingers in the wrong. Have a bag of gold in the wrong spot there. Gotta leave one exclamation point. Here's lean cut. Look at that. This is that's what I'm talking about right there. It's craziness. This is price per 100 pounds on the hoof. Right there. So, and just a wild chart right there. Look at this. If you like beef, whew. I have to put a cow in the spare bedroom. Start feeding it. Holy cow, man. Holy cow. So this is, we've gone from right back here in COVID times, 83 per 100 pounds to 216 per 100 pounds. And that's just wild right there. Going exponential. So we could see this going up to 280 based on the 3-month pullback chart here. That's a nice 3-wave retrace right into the roadmap line on the 3-month chart here. We struggled at the 1448. Look at that. Does this work on everything, every chart? Look at that. Retested the breakouts, pushing on up, not even stopping here. May see this going up to 280 on lean cattle, live cattle. Craziness. It's a crazy chart. And cocoa consolidating here. We can see cocoa going up again. If we break above the 618, be up to $13,000 per ton. It's price per ton. I think it's metric ton, which is 1,000 kilograms. A little bit more than a U.S. ton. Anyway, just wild, man. All the things, so crazy. And remember, today is 30 minutes of awesome. I go through a lot of these extra futures charts and check them out. Things, sugar at least is on the down slide here. Could see that break on lower, possibly back in that support we've had for a number of years. Poked below, a little bit of a downtrend. So, this is all on the red list. Yeah, I usually hit several of these. We got stuff like wheat pushing lower. Nobody eats wheat. Rice and corn. That's what the world eats. Corn pushing lower. Thank goodness. And then, of course, we have soybeans, which Kimberly doesn't allow me to talk about because highly allergic to those, but that's relatively flat. So a lot of the feedstocks are relatively flat. I don't know the code for rice, if there is one. So it's interesting, right? You can look at the food and see how it's running. Corn looks a lot like the CPI. Funny enough, big ramp. And since corn is such a integral part of so much of the junk that we eat in the United States, so goes corn prices, so goes the food prices. So if corn starts taking off again, we'll probably see that play into food prices again. See those spikes? As corn prices go up, that's what pushes prices of food up. But then, that's interesting, TGLS. And the market is open. And TGLS ramping back up again. That's what I expected. Get up, I did dump this out, and now we're gonna go hit the target. Had a few hundred shares from back here. Or was it? No, back here. I bought them back here at 30 and sold them out up here. This is, for those of you that been following me, that pattern where I talk about the measured bounce, and I'm like, well, that has a large upside potential. This is one I got into back here in November 23. I got out recently back here because I needed cash for margin calls and stuff like that when we were having some chaos in the market, and now it's going to go up and hit my target. So I booked a pretty healthy, almost 200% gain. Pretty nice. That's the power right there. So this may come on up to 140, but 88 to 140, not nearly the same potential as going from back here at 30 to 140. So late to the game on that one if you're trying to get back into it. I'm out. I'm not really chasing that one. All right, like I said, we're at the top of the danger zone. And we're hovering. A couple people are like, hey, I don't think we're going to see a pullback. That's okay. You can think that all you want. When you look at the counts, it looks like we're in the final little squiggles. I'm trying to fill it out. And what's going to be the reason? There's no reason. That's the hardest part about this. There doesn't have to be a reason for this to start down. Support is back at the roadmap line. We can see that hold there for a day or two. I do expect a bigger downside. I think we're going back, retest this area right down in here, somewhere around. And we have pulled up the potential slightly by going a little bit higher that we could find support at 5,300 instead of just 52 to 51. So there is potential that we could stop at 5,300 on a pullback, especially if we're going to be bullish and do a 3-wave correction here and set up the bigger move. I do expect this to take place into next month probably. This may take a little bit to play on out. Pull this on over here. My primary expectation is for a 3-wave style retrace like this. It doesn't have to happen, of course. Could we break on out now? Sure, it's possible. Doesn't really make sense at the moment, but it's possible that that's what we're going to do. Looking at it, the move up off the lows, we could push it on up to this 59.89 area right here. We're right at the point where I would expect it. We could push it as high as 59.89 to extremes before we got some sort of pullback. If we did pull that, if we did pull that off, get on up there, possibly by this Friday, that 618 would be sitting at 52.50. That would be a pretty steep, like 700-point retrace right there. 600-700 point potential right down in this area. Could be as high as 53.89, could be as low as 5,000. That's the zone where we would likely retrace to if we were to pop that 1272. And that's just, how am I coming up with that? It's this same exact 3-wave extension pattern right there. That's all we've done so far off the lows. We made a move up, a retrace, and this is the third move. Now, when you dive in and look at the squiggles inside here, this is looking played out. But that, played out doesn't mean we can't keep making some extensions higher. And if we were to break on out, go up to 62.50, this presents a whole different interesting situation, at least for the final little move, that we might be embarking on something more like what we did during the Great Financial Crisis. We did an initial dip, we did a pop up to a higher high, and then the big flush out for the multi-year flush out came. If you haven't seen that chart, well, let's take a look right back here. Pop back to a weekly so I can go back there faster. Right back here. This is what I'm talking about right here. We did this pullback. We did this ramp up to a higher high. And then the big down came. So this would be the similarity to what we're doing right now. And then for those of you that have heard me talk about the fact that we could have a greater depression type thing, that would be it. And what would be the cause? Now, right now, the thing I see that's the risk, the biggest risk, is a fiat currency failing. I'm not talking US dollars necessarily. I'm talking a major world fiat currency, possibly China. They're struggling right now. Actually, the narrative everybody's kind of used to is that China's buying gold like crazy, but they actually sold 1 million ounces of gold in the last couple weeks, which is not really much when they've been buying tons of gold. But net sellers is, they were still a net buyer in April. The numbers I found yesterday, barely. They were just barely above zero on net buying. They've tapered off almost to zero. And reports are, some of the, I get a lot of these things, these trader reports from trading desks in bank trading desks like Goldman Sachs, JP Morgan, Bank of America, and they try to kind of figure out what all these sectors and who's trading what and how they're positioned and what they're doing, and make projections and plans for what the future brings so that they can try to take advantage of those moves and make money. And one of the things they're seeing is that the possibility that China starts being a net seller of gold, which could depress prices of gold. And if they were to sell all their gold, we could see gold take a big correction. And it's speculated that if they turned into a net seller, they could probably finance their economy for maybe 12 months. That could take the S&P to higher highs. While they did that, maybe 18 months, and then they would be in an emergency situation. That's one of the things that is speculated that caused them to come to the table to negotiate out a trade deal, try to reset everything with Trump. So, that's the rhetoric that's not making mainstream media. So, you can let me know your opinions if you got them in the chat. I try to, just take in stuff and try to read the plausibility. Looks like to me we're going to have this kind of watermelon seed squeeze situation in gold for the next little bit. Right now I'm expecting a dip down in this area, right around 31.50. Then we kind of chop, maybe pop back up, lower high, maybe at that 618 level, right around that 33.50, 33.70 area. Then we take another dip here, back down to 31.50 area, back up, possibly only to 3,300. And then we go visit the roadmap line and this price area down here somewhere. Now, the time is the hardest part of this. If you're going off my timeline, I've moved these over twice already. So I might be off on timeline still. In fact, I could still be off on timeline. And this may play out through the fall even. Let's pull this all over a little bit. I'll pull it all over and then it'll start being exactly right now. That'll be the funny part to me. Funny to me, not funny, haha, but funny like, God darn it. So still expecting this to come on down and play out like this long term. Now that doesn't mean you can't make money on these rips. Like you can make plenty of money here and plenty of money here and plenty of money here and plenty of money here. And in between there'll be little dips and drops along the way. So that's what we got cooking here. That's what we got cooking. Yes, of course, sitting right at the top of the danger zone. We look back at where we are. We haven't gone anywhere since basically October. November, December, January, February, March, April, May. That's 7 months of doing. If you felt like the market's not really been the cash machine, grinding higher, well, spend a little time up here, spend a lot of time down here, and we're just sitting here going sideways. It's a lot of churn. You look at the lows over here. The lows take us all the way back to January 2024. I took back a whole year. Wow. It's just been shopping. If you feel like the market's not been treating you well, it's probably reasons why. It's been tough. You had to be on the right side of these moves. Otherwise, you're just sitting there waiting until your portfolio comes back at the all-time high. NASDAQ, sitting here, pushing the limits. Everything's pushing the limit, pushing the limit, pushing the limit. We're seeing this move up. Now, can we push out to all-time highs? Certainly possible. Anything's possible. It's just not very probable right now. This one could come on up to this, similar to SPX right here. Could see this push on up to 21,780. Entirely possible. Could see that ramp up there and then get the pullback. If we were to pull back and hold the roadmap line, that would set us up for a bigger upside. Russell here, struggling in the bottom of the danger zone. I did add that put spread I was talking about yesterday. Go back and see that if you want to. CL still underneath that resistance. This resistance right here, this zone comes from the prior low back here in May of 2023. We are right below that low. This is possible to be done. It's possible to be forming a reversal off the lows. I think it would look best with one more lower low before we turn it, but it's possible that we're done here if we can break back above, break through the daily roadmap line, break through the downtrend of highs that we've had cooking all the way across here, break through all that stuff, we can turn bullish, possibly go back up to 100 on oil. GC, we already talked about. Bitcoin, let's go to the spot market, kind of look at what we're doing. We're just consolidating right here, right at that 105 resistance. Yesterday took a big kind of step back after pushing higher, pushed up into that 105, took a big step back. End of the day, kind of benign. Today we're just sitting there resting. I do expect this to come back here. Now it's possible we only come back to about 96, maybe 94, that 94, 96 area right in here where we consolidated for, seemed like forever before we did this last little pop. I do expect it to kind of come back there because this looks complete, similar to the S&P. If we saw this pull back, it may lead the S&P back down a little bit before we can pop again. Ethereum, sitting at that daily roadmap line. A lot of times we see stuff sit here and then pull back before it can bust through. That would be consistent. It's a consistent pattern across there. NKD, to me, this is maybe the biggest tell right now. If we take this back down here, we're probably going to get the extension here. If we can hold the box and turn higher again, possibly get out of the top of the box, everything's going up. Dollar, like I said, we're probably going back. You know, we broke out of that little squeeze channel thing. Probably going back to retest the daily roadmap line. If you don't have the daily roadmap line, you don't have the roadmap line, click my channel, like right underneath me. Click my little logo, go to the channel homepage. The video that I have pinned that auto plays is, and it says my favorite indicator, like that gives you the code. You can do it all yourself. You can put it right into TradingView. You can take that, the EMAs I tell you in the code, and if you're swoofed enough, you can apply those to your own platform. It's not that difficult. I give you the exact numbers, the exact EMAs I use, 144 and 169, and you can apply those to any platform. It doesn't have to look like this. It doesn't have to be an orange ribbon. It could just be 2 lines. And I mean, that's it. That's all I really got. I just colored it a fancy orange so that, you know, we know it's a support resistance line. I teach you how it works in that video. Show you the fib lines that I watch. Although we did recently add a 1448, which is 90% of the way to the 1272. I've added a lot more statistics to it. Maybe I should make some new videos talking about the exact numbers and stuff for this pattern. But right now, that's what we got. And if you want an easy button, click the more button in the description. $5. I'll give you an easy button. You just click it, put it on your chart. And if you come to Discord, you know, that also gets you in Discord. I've got a link for like Thinkorswim, and I've got another link for MotiveWave and a few other platforms, I think. Those are pinned to the Market Roadmap channel. So once you get in Discord, you got to follow the rules, especially rule number 9. Get authorized to see the channels. And then all the things are pinned in there. So Apple has resistance here, has support down here. We might see this retrace right there, especially if we get the market pullback. Can the market actually go higher without Apple participating? We've seen kind of a rotation of back where Microsoft is now the top company, and it is working on trying to break out right here. We can see this push on higher in the last, gosh, 25 years since, almost 30 years since I started trading live money. We've seen kind of Microsoft and Apple flip-flop who's the biggest company in the land, back and forth, back and forth. Right now, we've got, oh, clicked on the wrong, it's right there. Right now, we've got, refresh, Microsoft at 3.3 trillion, Apple at 3.1 trillion. We're seeing Nvidia coming back into the 3 trillion club just barely. Bitcoin dropped back below Amazon, so we've seen Amazon come back up right there. Remember, companies at the top, for Microsoft to double, that takes $3.3 trillion from somewhere flowing into that to take that price from 450 to 900. That sounds really hard to me. A lot of people don't think about that when they're like, oh, I think Microsoft could double. Okay, where does $3.3 trillion come from to double Microsoft? Now, you don't have to go far down the thing here. Meta at $1.6 trillion, well, we could, $1.6 trillion, it's easier for the market to come up with $1.6 trillion than it is $3.3 trillion. So this could double and put this in the $3 trillion club. Whereas this guy doubling and going to the $6 trillion club, almost $7 trillion, that's difficult. We see gold dropping out of the $22 trillion club, and Bitcoin just hanging out at the $2 trillion mark here. Still seeing Bitcoin kind of maintain a little less than 10% of gold. And if you wonder what site this is, it's Infinite Market Cap, which is just 8, the number 8, marketcap.com. Right there. Moving on. Hit some more Mag 7 stuff. Amazon. Be careful. This is right in, that was a big pop yesterday. We're hanging right at the top of the danger, or right in the danger zone. We could easily see a pullback before we could go higher. I would just be cautious here. That would be the name of the game. Google not really participating much here. It's one reason, this is a very bullish setup, and one reason why I was going after it selling puts pretty aggressively is that it's not really moving, so it's producing a lot of premium that you can sell here if you're selling puts. If you put those shares, you have large upside opportunity because it's kind of a bullish chart. Now, looking back at the market cap, 1.9 trillion. So a double might be a stretch, but a higher high, not really a stretch. We could see this add $1 trillion, put it in the $3 trillion club fairly easily. Fairly easily. They had huge growth numbers when they reported earnings. It's kind of like they do produce their own chips for AI systems. They still buy quite a few from NVIDIA, but they do produce their own on their own silicon, their own research. They produce their own quantum chips. So they do design their own chips and stuff. It's not just, people look at it as just a search company, but they've got a lot of other things going on. Quite a bit. So we've talked about most of these. Meta pushing on through. This is now set up 793 on the upside. Like I said, this could double. I talked about this as we were at the lows, that this could be a huge opportunity right here. Already, we've gone from 400 to 600. If anybody got that, let me know in the chat. I congratulate you. I did not pick up anything, but this can easily get on up here. Seeing pushing those numbers on up on my S&P. NVIDIA pushing above. This is starting to set the stage that we could push on up. I like to see this. I've been talking about the fact that if we could get above all that downtrend resistance crap, we could potentially see this back up to 164, and that's the potential that's set up here. So what I don't want to see is it fail in this danger zone right here. I actually want to see it make a higher high than this one right back here and push on up to those new all-time highs. I'm cautious on that one. Tesla. We've got the major resistance right up here around 360 up to about 380. If we pop right on up there, I've talked about this for a number of weeks, maybe months now. I would expect it to retrace back out of that zone and then go for the bigger move. But we're also coming up on a calendar event here. We have, there's a, they're basically launching a new product segment here sometime in June. And then we have earnings coming up out here late July. So end of the quarter, entering a new market segment. They kind of plan on an early June release because that's what they've been teasing on X. Maybe a slow ramp, maybe a fast ramp. They're hoping to scale this up pretty quickly. And it's their cybercab service. So they're going to compete with Waymo, going to compete with Uber, going to compete with Lyft. And everybody's like, well, it's taken Waymo a long time to build their fleet of 1,500 cars that drives about 250,000 miles a week. It's like, yeah, but Tesla can throw 30 cars in Austin pretty quickly, build some confidence, roll that out with a software update to a couple million cars that are available. And very quickly they go from, 30 cars on the road with this software to, possibly uploading the people that own the cars, own cars, making it available for them. They could have 250,000 cars on the road in 1 mile. Just drive each of those cars just driving 1 mile already exceeds what Waymo does in a week. And then, the sky's the limit from there. So there's going to be hiccups and problems as that product comes out. So, but this is a paradigm shift, a new, completely new market segment for Tesla as they get into this of robotic cars. We'll see what happens. Waymo is Google right there. A lot of people don't know. There's a lot of naysayers on thinking that there's no way that a vision system can compete, but you should go ride in a Tesla. Like, try out the full self-driving. It's just wild. Absolutely wild. So we had gainers and some decliners and a lot of setups out here today. So going through the setups, potential entries set up for today using the market roadmap pattern. That's what these are. I wouldn't take this one. Now, it found this one right here. I'm going to turn it on. And you can see it didn't actually trigger on TradingView. And that's because I would go off of that, and that's probably the one it found, and it's probably too long, took too long to set up. So it filtered out. LGM. This one did fire off right here. Clear this up. Statistics for this particular ticker at the bottom. If it's under 30 on the number of trades, it doesn't really mean much. All right. It's 30 is a statistical population. If you're under 30, doesn't really mean much. So when we go look at the bigger test I've done with 56,000 trades, this percent profitable, which is taking the entry here and riding it to this 1.1448, which is 90% of the way to the 1272, 75% likely across 56,000 trades. When you enter the conservative entry, take the conservative exit, 75% of the time you win. If you ride it up to the 1272, that drops down to about 70% likely. So I'd rather up my odds as much as I can. So that's the trade that I talk about over and over. Get in here, get out here. You could be even more conservative, but that's the trade right there. Alley Financial. And that one, I can see exactly what I built the algorithm, so I know what they're hunting for. Right there is what it found. That has potential to go to 39. but I would be more interested in the bigger move between that high and hello. It's going to take a move up in a little bit further up to kick that off. Right here, look right here. And I'm not a big fan of the downtrend in the roadmap line. So yeah, that 618 kicks off right up in here. And the upside would be a new high right up here around 48 for Alley. AROC. And I don't like the way that rejected. ATAT. There's the potential. 35.26 would be the target right up there. Baba. Got the close above yesterday, so that is an official entry for 157 target up here. Looking for that to rock and roll, but it could fail. We're still in that danger zone. If, you know, China conditions with China suddenly flip the script, we can see this drop out. BXMT, Blackstone Mortgage Trust. This might be my double dip pick. I gotta make a note for that real quickly. I have something called double dip trades, and this looks like it might have triggered what I like to see for that. I'll have to do some more work. That may be the double dip trade pick. We'll see. CLMB. Go for the highest high, the lowest low. And that, so the algorithm in Discord picked up that high. It has my algorithm in Discord, I set up to stop looking back when candles hit the roadmap line. That's not the way TradingView works. So that's why some of these that it picks up on the daily list. I'm like, when I look at it, I'm like, I would go for this right there. I want more charts to look at with the daily list. So I actually cut off the back search when it hits the roadmap line, because technically that was the move up, that was the retrace, here's the entry, and this can actually work out inside this trade before it ever goes out to a new high. So this actually gives you more opportunity right here for that move. This one is pretty good, except the statistics don't really matter because it's under 30. CLMB, CNA, that's really choppy sideways. Last one stopped out on this volatility. There's the high, there's the low, kicking it off. 52.36 is the target. This one, 41 trades, statistically significant. 83, almost 83%. That outperforms. That's what I'm looking for, something better than 80. This one, 1.3, only about the average. I mean, that's good, but it's not a check plus. Like, I want something over 2. That's the ones I really like to go after. So this one, highly likely to go on up, hit the target. This does tend to trend, but the last one did fail out back here. So is it possible they fail? Always possible they fail. CNNE right there. And that one found that high, that low. Right off the entry, 20, but this looks like it's a downtrend, so I would be careful chasing that one. Cisco Systems. This actually looks like a pretty classic, beautiful setup right there. They get 68.50 on the upside. CTOS. Picked up that one. Entry 564 target. Be careful. Low price stuff does not always follow the pattern. And the bigger picture, potential reversal here would get 675 and hasn't fired off yet above the 618. DKNG. I would not get involved in this right now. It's going to take a move on up through that consolidation. That's volatile too. Even though we fired off and one, would need this to come on up above 43 before I really wanted to get involved in that. EBTC. Nice, calm looking. Potential uptrend to 46. EGP. A little bit of a downtrend. Not my favorite. The statistics say that doesn't matter. But for me, it does matter. 197 would be the upside target there. EXPD is also a downtrend. Not my favorite setup. Look for that close above the 120 area to get 133 on the upside. FRME. You see the point, right? Like, put the high, use the 2-point fib tool, drop from the high down to the low. When we get above the 618, you take it, target 1448. GM. Oh, this one found the small little move right here, which is completely valid. 55.27, and that might work out inside the bigger picture move here. GOTU. Oh, that one's very, very pretty right here. That looks like it's going to pop. Oh, it's a measured bounce too. That one may outperform to the upside. It's a really pretty pattern right there. A low, high, low. This one might go on up to this area right up here. $669, possibly $875. It's low price stuff, so it might fail. Under 10 bucks. That is a very appealing pattern right there. GTN. Some more low price stuff. HQY. Firing enough. 123 on the upside. KWeb. I'm already in this from this last move. Kicking it off right there. Got that 41 upside. And 40, 41 in there. For this to rally on up. LEGH. Right back down. That doesn't negate this setup working, but it didn't actually fire off for me. It picked up that one. Closed above 28, but you can see the choppiness and the flatness of the roadmap line makes me not want to trade that one. LI. That high, that low. Kicks it off for a potential move to 35.62, which is just inside the, I mean, it's not even a higher high. It's not anything. It's just inside this consolidation we've had. So you can catch that move right there pretty quickly, pretty easily. LKQ. So the stop is always $1 below the low, whatever that would be. Here's the high, here's the low. Looking for 46 on the upside. It caught that little bitty one, and that went $1 below the low here. That's another reason why low price stuff a little bit more dangerous, because $1 risk on a $4 stock is 25%, but $1 risk on $100 stock is 1%. So now we're kicking off 41.87 LOGI. Here's the high, here's the low. We didn't quite kick that off. It probably picked up that right there. We did get that close above. That would be a 97 target, but I would probably go with that right up there. LSCC. Got the high, we've got the low, entry, target right there, 77.46. Mattel. Before I clear this, let me zoom out and look at what I had drawn. I'll just clear that and clear that. Yeah, this one did fire off back a few months ago and we hit the target. So now we have a bigger swing in price, bigger upside potential. The caution here is that we would need to break the downtrend of highs that we've had for a number of years to be able to go to the target. Can we do that? Or should you maybe get out at that prior high right there, around 22? Safer bet and more conservative, get out around 22, but you could ride it up to 23.66. This one's a nice long history and does work out most of the time. MCW. This one's already in it from back here. It's another potential entry. And this algorithm won't take 2 entries. So 894 on the upside. MLI. Got that high, we got this low, got the potential to break through. 101, as far as I'm concerned, that one hadn't kicked off yet. This one, though, did kick off. I was actually looking for it to stall out in this area and go a little deeper. Did the roadmap pattern, broke through. 161, be the upside right there. It is going to take breaking through that triple top. Oh, top. Gonna have to break through that to get there, so I don't know, with that profit vector that's actually negative, I'd probably skip that one right there. And this is statistically significant. It's got 61 prior trades. Does win a lot, but the losses eat up the gains. In GVT, I like to go after things that make me money. There's the high, there's the low. 54.60 target. In and high. There's the high, here's the low. There's the entry, 126.54 in US. Probably a bunch of stuff you never heard of right here. There's the high, there's the low, kicking it off, 1082 and XST. Here's the high, here's the low, kicking it off, 190. OBK. There's the high, here's the low. It grabbed that little intermediate high right there on my scanner. I would want to see this pop up through that consolidation and get the upside to 43. OIS. Yeah, we still got quite a few. OIS. Working on reversal. I would not touch this right now. I would be very careful here. It's like back to the CL chart. Can we get that, or are we going to retrace before we can pop it? That's a downtrend. We're under the roadmap line. I'll be very, very careful. PDD. Again, this is a cautionary thing. If you believe China's turning, I don't trade China just on principle for the most part, but right there. PFG. Principal Financial Group. And I don't like the sideways chop going on here. I just don't like it. Got that move up, 93.50 target pins. I actually believe this one's gonna turn quite bullish here. Got the high, got the low. Just barely squeaked above, 44.28 on the upside. There, you can see it didn't actually kick off this algorithm. Took too long to do this correction. And I'm not hitting the right lows. Turned my magnet off because it was getting annoying. Oh, it picked up that high right there. Closed above. So 37.80 37.08. But if you're going for the bigger move, We need just a squeak higher to kick it off for that 44. PRI. Yeah, I wouldn't touch that yet. Big consolidation scares me. I've traded enough of these that would give me pause right there. This is trouble right here. We need that to come above that trouble to get the move on a higher. And you can see right here, this has tended to lose more than win. PTLO. Yeah, and the bigger potential 1678 rock. Seen a lot of these potentially trying to reverse here off of the downtrend. Gibraltar Industries, this would be 75 on the upside right there. Did not kick off this algorithm. On TradingView, they are written slightly different. I couldn't replicate them. Plus, the calculations for EMAs are different. One of the things I found out, in Python, it uses data science ways to calculate EMAs. The financial industry historically uses a different way to calculate EMAs. I just thought that was fascinating. And if you take statistics, you'll understand that professors invent ways to do all sorts of statistics numbers. And they're like, oh, don't use those. You know, I know that your book that you paid $900 for has these statistics tables in them, but we're not going to use any of those. We're going to use the ones that I developed. And just go print them out or buy them at this other bookstore. And, you know, we can use those tables while you're in this class. And I'm like, what the fork? I thought, you know, statistics were statistics, but no, I don't like those. You know, we're going to use mine. So statistics, you know, as they say, like statistics never lie, but liars use statistics. And so you got to be careful right there. Statistics are a fuzzy thing. So bottom line, my tool that finds this list runs in Python and uses the data science EMA because that's the simple one to use. I didn't feel like recreating the wheel and trying to use the same way that TradingView does it. There are differences, and it can be quite substantial if charts have been moving quite a bit. So that's one reason why I get slightly different results. Plus, different data sources. Funny enough, you think that the chart's the chart on all platforms, but as I find when I pull up data on TradingView, sometimes the highs and lows are different than when I pull up data on Tasty Trade or E-Trade or Thinkorswim. And you're like, well, I thought price was the price. And, well, yes and no. Most of the time, that's the case. Sometimes it's different. Especially if you're in crypto. With crypto, every exchange is different. Forex, every exchange is different. They have different prices. So you got to look at your data source. For the most stocks, we usually get a nighttime reconciliation, but occasionally there's outliers, mistakes, whatever you want to call them, but that does affect the data. So my Python script pulls from a live account at alpaca.markets. It's an algorithmic trading place. Never seen this before. Alpaca.markets. Right here. This is actually a brokerage right here. I have a live account funded that my bots run on right here. And it pulls stocks and option data. Don't pull so much crypto, but it has that ability. And I get the prices for the algorithms from Alpaca, which may vary from TradingView. A lot of times it does vary from TradingView. And I don't pay for extra data from Alpaca, so I get the free data. So that may or may, it is a brokerage account data, but it may have mistakes. That's what I've seen. Even paid data has mistakes. So. YMM, there's the high, there's the low, kicks it off, 1450 on the target. YPF, high, low, I would look for this to clear that 38 area for the 52 target. And then ZI. High, low. I'm not keen on the way this is reversing. It is firing it off 1350 target. That's the list of potential entries. A lot of stuff, but not a lot of great stuff. I'm still in MCD. Still looking for that to pop the targets. And I'm still in PGR. Looking for them to pop the target. Both of those are bullish. And I'm in both of those. So spot checking some of the gainers and decliners for the day. Got MSTR just hovering. FSLR. Wow, look at that reversal off that. That may have finally bottomed. Let's see here if we can break back up through the 618 there at 212. This could finally kick off a bigger rally on FSLR. We could be looking for a 352 target up there. It's almost a double from where we are. Not quite. Maybe 400. That would be a double. So HCWB. I wouldn't touch that. Wouldn't touch that. On. Yeah, resistance right there. Be careful. Set up the stage to go on up to 70 FedEx. Resistance up here at the 250 area. Connell. Yeah, Coinbase did catch some news yesterday that we're going to list it into the S&P 500. It's going to replace DFS. It's looking like the Capital One acquisition is finally going to play out. So they're going to delist Discover and put in Coinbase as a financial replacement. It's pushing it up above the roadmap line right there. That nice big retrace. Got to get above the 618 to kick off the bigger upside potential on Coinbase. That high, that low. There you go. That resistance is sitting right in there. Looking pretty good though. My upside target still sitting up here 600 to 800 on Coinbase. Restoration Hardware still working on coming back up to the roadmap line. STRK. Perpetual Strike preferred stock. Interesting. MSTR is. Why did I type MSFT? MSTR. MicroStrategy. That can easily come back down. Be careful. Decker Outdoors coming up into the resistance. Things that were dropping down $2 or more. UNH. Dang. I should have held those puts. Hit the target. Holy fudge muffin. I booked out my puts right there. Because I was like, well, that was a big one-day drop. And then look at this. Holy sugar. Wow. So that correction played out really quickly. That's what I'm afraid of that happens in the S&P 500 right there. That fast crash type move. I mean, that went from 610 to 300. That's 50% almost. We can see this come on down to 200s area. Do have that long-term support that we may go visit, but holy sugar, man. I know some of you took a piece of, did anybody hold that through that move to the target? I guess let me know. You can let me know on Discord if you did. I mean, holy crap. Surprised myself. Instead of sitting here and gloating, I'm just surprised like that worked. It scares me when this stuff works. I mean, Sledge, that's another one, like the bolt flying off the plane. First Boeing. I mean, I actually traded the one with high conviction, but I booked my profit. Elevance, looks like we may be coming down here. CyberArk has the potential to rally higher again. There's the high, there's the low. 445. Halo getting whacked. Humana. Played that as a put last week, and now this could come on down to 207, but we're near a bottom. This actually should be hunting a reversal at this point. We rejected off the roadmap line, so that can push us to a lower low. Got that high right there. Lower high, lower high. This can push down in that 203 area. ODD. And just kind of consolidating CI. Right there, FUTU. That did kick off the entry. Looking for the upside up there at 140. MRK. Still hunting a bottom. I think we're basically at it. This could be a measured bounce if we can find support and actually push higher. Targets could be way up here for MRK, up here around 200, 300. Johnson & Johnson rejected the breakout, and we're just sitting here. I warned about that breakout not holding. That's exactly what it did. This looks like first move down, retrace, and we may get another leg that tests poking out the bottom of this big channel that we've been in for Johnson & Johnson. It's been a big, long, years-long channel. 22, 23, 24, 25. Still in a downtrend. CNC, still hunting a bottom. Potential reversal there. 67.50 upside. CVS. And potential little market roadmap bounce here. If it could pop back up, 73 to the upside. If we get closes below the roadmap line, we could go back down to test this consolidation zone right here. All right, bias for the day. I'm still sitting here very cautiously awaiting a top. I think, like, I'll sit here and be very careful. We could push out the new highs, but this would be my extreme danger line, I guess you might say. We drew it on the SPX earlier. This would be the extreme danger. 98.60, 98.89 right there. We could go hit that. If we do, watch out. Now, if we bounce off of that level, come back, hit the roadmap line, hold that, and turn back higher again, we could go on up here. That would be a new all-time high. So that's in the cards. Not the highest probability, but in the cards. Right there. Alrighty. Have a great day, everybody. I'll be back 5 p.m. Eastern. We'll do 30 minutes of awesome. The only time I do a request show every week. Hunt for opportunities. Talk about it. We'll see you later. Thanks for